Hey, good morning everybody. Today is Wednesday, June 29th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Let's get started by taking a look at the sectors that are showing the most strength as measured by the 100 most powerful stocks in the most powerful industry groups. Yesterday, fully half of the stocks in the top 100 came from financials. We saw strength in healthcare, energy, utilities, and consumer staples. Let's take a look at our industry groups. Of the 100 most powerful stocks in the most powerful industry groups yesterday, 48 came from the real estate investment trust industry. That's a lot. Midstream oil and gas, we had 7 stocks in the top 100. We had 5 integrated utilities, 3 biotech, and rounding out the top 5 we had medical devices and precious metal mining, with 3 stocks each in the top 100 most powerful stocks in the most powerful industry groups. I would think that midstream oil and gas would be a good place to look for leadership in this market at this point. Let's see what the Russell 2000's up to. Russell found support down here in the 1085 area. That support came from this low back in the middle of May. The fact that we held that support area, I think, is fairly bullish. While the S&P and the Nasdaq aren't looking particularly bullish at this point, the fact that the Russell held that low, I think, is very encouraging. We'll see if the Russell can come back and take out its 200-day moving average. Recapturing the 200-day, I think, would also be encouraging. As I've been saying for months now, I think the Russell 2000 is the key to the market going forward. The fact that the Russell held that critical support level, I think, is encouraging if you happen to be a bull. Let's take a look at the Nasdaq Composite. But before we do that, stocks had a healthy bounce yesterday after 2 sessions that saw sell-offs of between 5 and 7% for the Nasdaq and the S&P. Trading volume was above average, but was uninspired compared to the selling of the prior 2 sessions. The good news for the bulls is that after undercutting critical support at their mid-May lows, both the S&P and the Nasdaq recaptured that level of support. The S&P also recaptured its 200-day moving average. The close above the 200-day moving average changes our market timing model on the S&P from a sell signal to a don't buy. Erring on the side of caution, I would look at yesterday's activity as an oversold bounce and would use the opportunity to lighten up on weak positions. The investors.com model is showing a market in correction. Our market timing model is now on a sell signal for the Nasdaq and a don't buy signal for the S&P 500. A sell signal on the Nasdaq indicates that aggressive traders should be off of margin and can sell short. They should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. The don't buy signal on the S&P indicates that conservative traders should have stops at their tightest levels and shouldn't be adding to new positions to their portfolios. Yesterday, advancing issues swamped decliners by better than 5 to 1 and actually closer to 6 to 1. New highs were back to bettering new lows. According to our Ramosi ratio, large capitalization stocks bettered small and are now outperforming on a 10-day moving average basis. Bulls prefer to see small caps outperform. Tuesday morning, many of our indicators were showing an extremely oversold condition in the market. Yesterday produced the expected bounce. Now we'll see if the market can follow through on that strength, or if yesterday was just a dead cat bounce and a more sustained downtrend. Be careful on both the long and the short side. We've seen significant structural damage in this market, and I would expect it'll take some time to repair and reverse. The market's recaptured short-term support areas that we had been watching recently, For the Nasdaq, that's the 4678 area, and for the S&P, the 2044 range. If we're to get bullish again anytime soon, the market needs to hold those levels. In the meantime, we're getting mixed signals on our market timing model. Neither's bullish. Err on the side of caution and keep your stops on any remaining positions at their tightest levels. Okay, yesterday the Nasdaq Composite was up 97.43 points, or 2.12%. We recaptured this critical support area in the 4678 range and closed right smack at the top of our daily range. That's a little bit encouraging. Certainly recapturing this level is also encouraging to the bulls. Trading volume yesterday was a little bit above average, but certainly well below the prior 2 days. For you followers of William O'Neill, we are in a market in correction. We've been in a market in correction since yesterday, June 28th. Our market timing model on the Nasdaq is showing a sell signal. Right now the Nasdaq appears to be bracketed by support down here in the 4506 area. More immediate support here in the 4678 range, and probably resistance up here at the 200-day moving average. Let's take a look at the S&P 500. Yesterday the S&P was up 35.55 points, or 1.78%. We also recaptured critical support, and we recaptured our 200-day moving average. The result of recapturing our 200-day moving average is our market timing model has gone from a sell signal to a don't buy signal. A don't buy signal on the S&P indicates that conservative traders should have their stops at their tightest levels and shouldn't be adding to positions in their portfolio, shouldn't be adding new positions to their portfolio. Trading volume yesterday was above average, but below the prior 2 days. The S&P is in a market in correction, has been since yesterday. As noted, our market timing model on the S&P is on a don't buy signal. Right now the S&P appears to be bracketed by support down here in the 2025 area and probably resistance at this long-term trend line. This trend line goes all the way back to the beginning of the bull market back in 2009. Before we go, I want to expand a little bit on the new market timing model that we had talked about yesterday, our swing timing model. And what I want to do specifically is I want to talk about the 4 states that the timing model can be in. In order to do that, we're going to switch over to our Nasdaq Composite. I'm going to take off these markups. We're going to take off the 50-day moving average, 200-day moving average. Going to remove the channel from our 21-day exponential moving average. Going to get rid of the 21-day exponential moving average. And we're going to add a 5-day simple moving average. We have 4 possible signals on our swing timing model. The first is a buy signal. A buy signal would be triggered if the 5-day moving average, which we show here in pink, is above the 10-day moving average, which we show here in green, and the price of the Nasdaq Composite is above both of those moving averages. We show that condition right here on this bar. We would have gone to a buy signal on the swing trading model at that point. A sell signal is going to be when the 5-day moving average is below the 10-day moving average and the price is below both of them. A positive signal is going to be when the 5-day moving average is below the 10-day moving average and the price is above the 5-day moving average. And a negative signal is going to be when the 5-day moving average is above the 10-day moving average and the price is below the 5-day moving average. That's a little bit confusing, I would imagine. However, it will become a little bit more clear as time goes on and we actually are seeing these signals triggered. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.